If you hold XRP, the Federal Reserve is going to make you insanely rich over the next few years. In this video, I'm going to explain why. But I do have a warning for you though, because people out there that are not investing in cryptocurrencies are going to get absolutely wrecked if they're not investing in real estate, if they're not investing in precious metals like silver, if they're not investing in gold, if they're not investing in anything and they're only holding cash in a bank account. So the saying that savers are losers, we're going to discuss that. We're going to talk about inflation. The FOMC meeting just took place. And here's what the Fed Chair Jerome Powell had to say.
F your f***ing options. F your f***ing zero DTE calls. F the economy. F inflation. F your soft landing. I am sick of this shit. F Wall Street. F you all. I'm f***ing out.
So how tired do you guys think he's getting of doing these FOMC speeches? And so now that it's over, here's the actual real speech. You know, that one obviously AI generated, so that was hilarious. But let's listen to the real updates and then let's discuss what's taking place in this video.
Inflation has eased substantially over the past year, but inflation is still too high. Further progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. The inflation data received so far this year have been higher than expected. Although some measures of short-term inflation expectations have increased in recent months, longer-term inflation expectations appear to remain well anchored. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. We will continue to make decisions meeting by meeting. Turning to our balance sheet, the committee decided at today's meeting to slow the pace of decline in our securities holdings. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
I'm f***ing out.
So as you guys already know, the Federal Reserve is basically the arson and the firefighter. So they cause the fire, then they try and put it out. And if we look back to March of 2020 on the Federal Reserve balance sheet, the Board of Governors of the Federal Reserve System, their official website, you can see March of 2020 how much they added to their balance sheet. And so what this caused was that 2021 bull run in the crypto bull market, and that's what caused altcoins to go absolutely crazy. And we saw, you know, what, over $1 trillion or $2 trillion come into the whole industry. And then right around the top, about 2022, you know, April, May of 2022, they started tightening QT. So this was QE, quantitative easing, and then QT, quantitative tightening. Now, if we were to zoom in on this and see what happened within the past year or two, you can see this period right here where they started tightening on their balance sheet. And then what took place on the 8th of March until roughly the 22nd of March were the bank failures, right? Silicon Valley Bank, and then a few other bank failures took place, and they had to bail out the banks, buy their bad debt, and then add to their balance sheet. Now, what happened here was this caused a rally in Bitcoin during that period of about 58%. And you can see right here when Bitcoin dipped down to about $19,500, it surged out of there while the banks were collapsing. So people were scared. They started putting money into crypto. And XRP, if we look at the XRP price chart, XRP rallied 69%, then consolidated sideways while Bitcoin was selling off. And then around the lawsuit news, you know, back in July, XRP went from 46 cents upwards of 90 cents. And so that was ultimately 174%, which isn't the craziest in the crypto space because, you know, we see some altcoins go 20x, 50x, and all that good stuff that we've talked about in other videos. But over the next few minutes, I'm going to be sharing with you guys what's about to happen next for XRP over the next few years. We're going to compare to Amazon, and we're going to talk about what the US Treasury is about to do, because they just announced the initiation of a buyback program running from May to July. The first buyback operations are set for May 29th. So here's an explanation of what this means, and then let's talk about the impacts on the crypto market and the rest of the economy. So the buyback program involves the US repurchasing the bonds that it's issued, basically buying back its own debt. And during this period, the Treasury plans to hold weekly liquidity support buybacks of up to $2 billion per operation, with up to $500 million allocated for TIPS, which is the Treasury Inflation Protected Securities. And this initiative aims to ensure the Treasury market remains the deepest and the most liquid in the world, addressing concerns about market functioning and resilience. So essentially, this is a bailout program for the banks. And the problems with this, though, are the Federal Reserve has increased interest rates since 2022 and tightened its balance sheet to reduce inflation by limiting liquidity and borrowing in the system. So this will counteract all of the QT, the quantitative tightening that they've done over the past year or two. And if the Treasury continues to buy back bonds, the debt, inflation will continue to rise, which may require them to keep interest rates higher for longer to essentially hold the line and keep rates steady over the next few months. And the Treasury buyback program may distort market dynamics by artificially reducing the supply of bonds, potentially leading to mispricing and inefficiencies in the bond market, even more than they already are. Because if we look at the 10-year to 2-year Treasury yield curve inversion, we can see we're all the way down at negative 0.33. But if we look at max right here, you guys can see the last times that we were inverted like this was all the way back in 2007 before the subprime mortgage crash that took place, 2007, 8, and by 2009, the markets were plummeting. Before then was 2000 to 2001 during the dot-com bubble boom. Before then was 1989, and then before then was 1978 to 1982. So this was a lot more volatile back in the 80s right here. But where we are right now, just breaking out from the low of June of 2023 of negative 1.06, this was the deepest yield curve inversion since August of 1981. So at some point, we're going to see the Federal Reserve balance sheet spike up when they start buying back this bad debt, because the Fed and the Treasury are essentially the same thing. Now, the last time that this took place, Bitcoin rallied 58%, XRP rallied 69% in a very short period of time, in a matter of a month. And the first buyback is set to take place at the end of this month, May 29th. So we're not out of the woods just yet, but this will most likely have a massive impact on crypto, not only in the short term, but in the long term, because during periods of quantitative easing or buyback programs, Bitcoin has historically experienced significant price surges. For example, after the 2008 financial crisis, when the Fed initiated quantitative easing measures for years, Bitcoin's price surged from around $100 to over $1,000 by 2013. And debt buybacks can increase market concerns about inflation and fiat currency devaluation, especially if the head of the Federal Reserve is saying that they're very concerned about inflation. That's not good for the US dollar, because this often leads to investors seeking alternative stores of value if they know their dollar is going to lose bare minimum 2% a year, most likely case scenario like 7 to 15% per year. And so they flight to assets like Bitcoin, real estate, precious metals, and other cryptocurrencies and altcoins, which drives up their prices. And that's what we saw happening. They're adding to their balance sheet from the 10th of March to the middle of April when they're bailing out the banks. And debt buybacks can lead to massive speculation in the markets, because as you guys know, crypto moves off of a lot of hype, because the news about ETF approvals, Bitcoin was rallying months prior to that, and many traders anticipate increased liquidity in the financial system, and they allocate funds to crypto in anticipation of higher returns. So they're buying the rumors before the news even takes place. So when I say we're not out of the woods just yet, what does that mean? Well, we need to look at Bitcoin's price chart on where we are right now, because we just recently broke a critical support of about $60,000. We're sitting at $57,000 at the time of recording this video. And if we look back at the last bull run, when Bitcoin claimed the 50 moving average back in October of 2015, we saw Bitcoin claim the 50 moving average of the SMA back on the 13th of March of 2023, and it stayed above it. So generally speaking, during a bull run, we want to see the price action, the price chart, stay above the 50 moving average the entire bull run. And then during a bear market, we see it drop below it during the complacency, then anxiety, denial, panic, capitulation, anger, and depression stage. So when we pull up the relative strength index on both of these charts here, we were very, very overheated right here on the 4th of March when Bitcoin rallied upwards of $74,000. The RSI was upwards of 87 on the weekly chart. Now, if we look back here, back in like 2017, you guys can see June of 2016, we were overheated. The RSI came upwards of 85. And so we saw a correction take place right here from roughly 777. So if you guys are feeling blessed, comment 777. If you're feeling bullish, comment 777. And if you're going to become the first millionaire in your family tree, confirm it by tapping that subscribe button. But in order to become a millionaire in crypto, you have to stomach the volatility. If you can't stomach the volatility, get out of here, man. 38%, negative 38%. If you put in $100,000 right here in June of 2016, within 49 days, you would have lost 40% of that. So it would be worth $60,000. And then if you don't sell, obviously, you're not taking any losses or you're not taking any profits until you sell. So if you just held, look what happened after that. The price appreciated from $400 and then just went absolutely ballistic after that. But there were these short-term temporary corrections on the way up. So this is not out of the ordinary to see a 20, 30, or even a 40% correction on the way up. We haven't even seen a big correction yet. We've just seen these little tiny little 20% corrections. So if this is your first bull run, you know, you're still playing in the kiddie park right now at these 24%. We're not talking until we get down to like $45,000, $47,000, which interestingly enough would be roughly right around where the 50 moving average would be. So during the whole bull run, we want to see the price stay above the 50 moving average in blue, and then we want to see the 50 moving average in blue stay above the 200 moving average, as you can see in red, just like what happened during the last few bull runs. Now, because the RSI was overheated and overbought upwards of 88, one thing we can see here as well too on the MACD is we see a potential bearish cross forming right now. Now, it doesn't mean that this cross is going to take place because we could see it bounce off of it. The MACD bouncing off of the signal line, just like what we saw back here in March of 2017 when it looked like a cross was taking place, but then the MACD line just reversed right on out of here, and then the dip was bought up, and then we just went parabolic. So we could be in a few different places right here on this price chart based on where we were in the past. So we could either be right about here when Bitcoin was at $1,000 dipping down to like 892. So we could have further to the downside to go, getting close to the 50 moving average or bouncing off of it and then reversing on out of here. Or we could be in a situation where we were about right here on the 18th of July of 2016, right after, you know, the RSI went from overheated, saw a sell off in the price chart as well too. We went to 67, then we dipped all the way down to 52 on the RSI right in the middle, but we held above 50. So during a bull run, we're usually going to see the relative strength index spend more time above 50, between like 50 and 90. So during this whole bull run, we've seen the RSI hold 50. So if we dip down, right now we're at 57, if we come down to 50 and the price starts dipping down to like, you know, $50,000, $55,000, maybe $49,000 or $48,000, I'm going to be allocating a lot of money into the crypto market again. But right now I'm just holding my position. So I'm not selling anything, even if we go lower, because I see the long-term vision of what's going to be taking place over the next few years based on what I'm going to be sharing with you guys in this video. Because when Bitcoin starts to appreciate, altcoins follow. And which altcoin has gone through a multi-year legal battle with the SEC that's about to get the clarity completely finished with this lawsuit that no other altcoin can say that it has. That's XRP. And when we compare XRP to the rest of the crypto market, it's in the depression stage when everything from a fundamental perspective says otherwise, based on what I shared with you guys in my previous video, talking about all their massive partnerships. So what does this mean? Well, it means this is the perfect storm of opportunity, because when do you make money in crypto? It's not when you sell at the top, it's at what price did you buy? Did you buy the top? Because you don't make money just by buying. You make money by buying low and selling high. So right now, where is XRP relative to the all-time high? Well, it's relatively low. And when you look at the psychology of a market cycle, all of the lettuce hands and the crybabies, you know, they get shaken out at the anger and the depression stage because they believe that their crypto portfolio will go down forever. They most likely bought at belief, thrill, euphoria, or complacency, and then they rid their portfolio all the way to the bottom, not realizing that disbelief, hope, and optimism comes next. So if you made the mistake of buying euphoria for any sort of project, whether it's XRP, Bitcoin, you know, it happens to the best of us. I'm not perfect. I've definitely bought some projects at the top because I thought they'd keep going up, and, you know, I've had to ride them through the anger stage and then into the depression stage. So I'm not here to claim that I'm some perfect investor here, but I'm here to provide you guys with education information so you can do your own research, because I'm not a financial advisor. You should consult your financial advisor. Crypto is very, very risky. You could lose a lot of money in these markets if you don't know what you're doing. And that's why I share this information with you, so you can have a more well-rounded approach and understand what to look for on the charts, because 99.9%, arguably 100% of the market, they don't know when XRP will take off or when Bitcoin will break out of this slump that it's in right now. But the 0.01% of smart investors know that it is inevitable based on what's happening with the dollar, based on what's happening with inflation. The elite, what they do is they outlast everyone because they don't care how long it takes. They will gladly watch. They will gladly wait for all of the minions, all of the peons at the bottom of the mountain that have less than $1 million in their portfolio, less than $100,000 in their portfolio. And even people that have less than $100 million are still peons, because when you're comparing up to people that are worth 10 billion, 50 billion, or even the $1 trillion families like the Rockefellers and the Rothschilds that really rule this world, we're all just bacteria on the side of the rock trying to become little minnows here and eventually become fish in the big sea of liquidity. So they will gladly watch and wait for everyone to sell so they can accumulate their bags over decades. Whales play the long game here. So let's look at Amazon back from 1999 to 2009. It did virtually nothing. So for about a decade, the price just kind of bobbled around, did nothing, didn't create generational wealth for anybody, maybe made some people some bucks here and there if they knew how to time the bottom and sell that little rally that took place. But ultimately, no generational wealth was created until about 2009 to 2021. Amazon rallied over 50x, over 5,000%, which for the stock market, that's absolutely insane, because as you guys know, the purpose of the stock market is not to make money, it's to outpace inflation so you can preserve your money. But for crypto, the rally that's about to happen over the next decade is going to be even crazier for XRP. So stop thinking in days, think over the next decade for what's about to happen. And I know if you don't have the patience to wait 10 years, here's one thing to understand. It's very clear that XRP is not going anywhere. It's been through a painful drought with little gains for holders the past few years. That's certain. But when you watch the video that I did yesterday, you'll see the bigger picture of what's coming next. And here's my prediction here over the next few years. Once we see XRP start to break out and start performing well relative to the rest of the crypto market cap, a lot of the people that have been talking negatively about XRP over the past 2 to 3 years, while Ripple went through the lawsuit versus the SEC, are going to start turning around and start talking positive about it as if it's the best cryptocurrency out there. And little do they know, the SEC is going to come after tons of other projects that will crush them. They're going to have to go through lawsuits, and XRP is the only one getting clarity right now. So comparing something like Amazon back in the 90s to XRP now, well, where crypto is right now, it's like the internet back in the early 80s or the 90s when it was just getting its grassroots before the titan companies like Microsoft, Amazon, you got Google and Tesla are now dominating. Then you got like the big 7 that are dominating the entire stock market. And so XRP could arguably be one of like the big 7 or the top 5 or whatever they're going to call it in crypto 10, 20, 30, 40, 50 years from right now. So if we look at when Amazon saw a sell-off in December of 1999 during the dot-com bubble crash, well, it didn't take until like 3,598 days later until Amazon broke that high. So we were breaking out of that dot-com bubble crash. And then by like 2008, there was the subprime mortgage crash. It was trying to break out upwards of like $5 and then crashed down again and then started to break out from here. And so with XRP's price chart right now, we're 2,310 days from the all-time high to where we are right now, give or take a day or two, because this cursor, for some reason, I'm on the weekly chart. It won't go to May 1st. But if we were to just put it out at 2 days, it's not going to make that big of a difference. When you compare to Amazon's chart, there was a shakeout event right here by July of 2006, and then Amazon started working its way out of here. So if there is a shakeout event in the markets and we see some sort of like World War III news, some sort of climate change disaster event to lock everyone indoors, or something that they plan that we don't know, some black swan event, sure, we could see a shakeout in XRP. We could see the price come back down to like 30 or 40 cents. That could happen. That's definitely on the table. And I know a lot of people would freak out and they'd say it's over, but look at this chart right here. It's clearly not over. It's clearly just getting started. And so we see this descending resistance right here. Once XRP claims this descending resistance and holds it as support on the weekly chart in the macro, I believe we're going to see a massive spring for XRP and a massive rally to the upside. Now, whether that happens in Q4 of 2024 or 2025, I think 2025 is the year, because Ripple's going to have the clarity that they need. The lawsuit's going to be completely done. Regulation is going to be coming into the industry. CBDCs are going to be coming into full effect. Ripple has their CBDC launching. Their AMM just launched. And no, I'm not saying that it's going to take 3,598 days from the all-time high. I'm just comparing to Amazon. Obviously, these charts aren't 100% the same, but they look somewhat similar. You know, they kind of rhyme here. As you guys can see, the 50 SMA and the 200 SMA kind of like bobbed and weaved around each other. You can see it bounced above it while the markets are rallying up. Very similar to what happened right here on the 3rd of May when the 50 went above the 200 SMA at the all-time high. Not the all-time high. This rally of, you know, October 3rd and then the rally of April of 2021 is comparable to 2003. And then we saw Amazon go into a bear market for a while until 2006 it bottomed out. And then after that, it started to work its way out of here. Of course, we had the subprime mortgage crash. Then it rallied way on out of here and performed over 5,000% from 2009 to 2021. So XRP over the next decade is one of my main holdings because I would compare it to like the Amazon or the Microsoft or the Apple of the crypto market. So what my parents and my grandparents went through being able to invest in the stock market at an early age, whether your parents did or your parents didn't, is basically like what we're going to be telling our kids and our grandkids by 2050, because everything from a fundamental perspective is right in front of our faces right now. And what are the chances with the most recent interview that Jamie Dimon, CEO of JP Morgan Chase, would have a similar logo to Interledger, the protocol for connecting ledgers, right in the middle of the frame while speaking about fintech replacing banks?
Bill Gates once said, banking is necessary, banks are not. To what extent could AI or fintech replace traditional banks?
So I think, first of all, I remember him saying banks are dinosaurs. I spoke to him about it in 1997, and he was dead wrong. He'd probably agree to that. But he's not wrong that technology changes everything. And if anyone is complacent or arrogant or think that because you have a big position today, you're going to have a big position tomorrow, that's a mistake. But then you have to define, what is banking? Someone's going to have to hold the money. Someone's going to have to move the money. Someone's going to have to raise the money. Someone's going to have to do research, around money. Those services will still be around. And, hopefully we're doing it and using a lot of tech to do a better job at it. But I've always thought it's very possible that some tech thing, disintermediates a piece of that. And I've been writing about, big tech going to our business. We got fintech, but we also have big tech. And they will embed payment systems in there. Some are going to white label banks, kind of what Apple did. They have the right to do that. I'm not against that. I would be against unfair use of their position to dominate us in a business.
So they will reveal this to the world. And those of you that have been watching the channel for the past year or two, it's obvious. We don't know exactly when it's going to happen, but by 2025, something big is going to take place. And we just have literally less than a year or two to just watch it play out. And in recent news, a bank just sent $755 million worth of XRP, and it was transferred in 4 seconds and cost only 1 penny. That's it. That's the news. That's why XRP will eventually win, because you can't do that fast and you can't do that cheap with Bitcoin. And when the Federal Reserve starts adding to their balance sheet again, what is that going to do? Well, we believe that's going to send inflation up. The spending power of the dollar is going to continue to go down in value. That's a fact. Based on inflation, blockchain technology, distributed ledger technology, and cryptocurrencies are going up. That's the truth. And together, you know where we're going. We're going camping on the beaches of the moon. So I will see you guys in the next video. I will see you on bullrunners.com, where you'll get exclusive early access to our underground guidebook for discovering 100x altcoins if you do want to diversify your portfolio before Bitcoin reclaims the all-time high and goes parabolic over the next few years. You don't need any previous crypto trading experience if you want to do your own research. This book is for educational purposes only. We're about to launch our crypto education platform to help you guys better understand this industry. And if you want to be notified first when that's ready, we're getting very, very close. All you have to do, go to bullrunners.com, put in your best email address. It's free to do so. You get instantly subscribed to our daily video newsletter where you get the best information every single day to help you prepare for the worst that's yet to come in this economy. So I appreciate you guys for watching this video. I'll see you on the next one, and I'll also see you on the beaches of the moon. As always, you know what to do. Stay bullish.